Right, hello everybody. Thanks very much for being at today's live podcast. I suppose it's got visuals. It's not really a podcast, is it? Webcast. And we're talking about Brexit today. My name's Adrian Boothie. I'm the head of trading here at Trend Signal. I'm joined with Jerry Miller, who's our chief analyst and CEO at Trend Signal as well.
Hello. Hi, welcome.
This is something a bit different. We've not really done one of these before, guys, so be gentle with us in the questions box. What we want to do today is really get into a lot of the information that's going on out there to do with Brexit, to do with deal, no deal. In fact, it's all coming in on the news wires literally as we speak, so very hot topic. But more importantly, the question really is, how is that going to impact the markets, and how are we going to be able to trade that with a view to making some money off those market movements as well that are going to be coming up. So what we want to be doing today is getting into a little bit about what the backdrop is, what's happening, what's going on, and then we're going to talk about how that's likely to impact the markets and what we can then do in terms of our trading strategy to get the most out of it, okay? Now, a little bit of housekeeping before we do get started. You can, the reason we're doing a live session today, normally we do our podcast as a straight off recording and then we upload it later on. We actually thought a few people might like to ask a few questions, try and help with a little bit of the content and try and help your understanding as well. So if you find your way to the questions box now, please, somewhere on the device on which you're watching, you'll see a chat box or questions box where you can type something in. Do me a favor, just type hello or type where you're from into the questions box. This is how you can ask your questions during the session. I may not get around to answering every single one, but we'll pick up a few questions as we go through just to make sure everyone gets maximum enjoyment out of today's session. All right, guys? Good. So look, Jerry, well, it was all about Super Saturday, wasn't it? Or not, as the case may be.
Well, it was a Super Saturday, but nothing to do with Parliament and any progress on Brexit. We've already had a bit of a leg pull with one of our attendees from Australia, and he won't mind me mentioning it again, but it was a Super Saturday, but for reasons of the rugby, nothing, the World Cup, nothing to do with Brexit, which was okay, but a bit disappointing to rush back from the pub to find out that absolutely nothing has been achieved. I think it's been referred to as a damp squib. Depressing Saturday is another word. Dither day. So nothing achieved really, and the press described it as an anticlimax, a plot to wreck Brexit. I mean, you typically have the leaning, the leave-leaning papers, the likes of the Mail, the Express, the Sun, all nailing their colours to the leave side of things, and then you've got the the likes of the Guardian, the Financial Times, the White Times to a certain extent, although they're sort of more on the fence. So you can see the theme that runs through it, but you know the opinion is that Labour is part of a sort of rebel alliance trying to stop Brexit. So unfortunately, we thought we'd witness a big move last night when the markets opened for the first time since Friday night. So 10 o'clock in the evening.
That's right. I logged on to the prices, I think, at 5 minutes past 10 or whatever it was last night, thinking, well, I knew not much would happen, and I was right. It was down 20 or something on pound dollar, and I think we're all expecting it would be up or down several hundred, didn't we?
Yeah, we were expecting a good 300 point move either way.
Yeah.
But in fact, nothing happened, and the reason is because the vote never actually took place. But it's quite interesting because all the banks, certainly a lot of the London banks, have actually sent a lot of traders and managers in for Sunday night to cater for the liquidity and to provide that sort of liquidity and balance the markets to prevent any massive moves that also to make money out of it, I guess. But it didn't happen. And yeah, poor banks.
But I suppose for us today, it actually probably makes today's webcast a bit more interesting because there's still all those variables are still on the table, really, aren't they?
Yeah, absolutely.
Otherwise, we might have been in today saying, well, it's already happened now, so now what? There's still a few uncertainties. Let's face it.
Tempted to refer to Super Tuesday, which is what the press are already talking about tomorrow. But these super days seem to come and go. But it's interesting because sterling slipped only marginally, and I think you've got it on the screen. I think, but anyway, just for those people who aren't looking at the screen necessarily, we were trading around sort of 29.5 last Friday at the close, sort of around 8-9 o'clock, and really the fall today. We saw it dip below 129, but it's now around 130. It's actually pushed through and made a new high this morning. So for the FT and some commentators to say that sterling has fallen or stumbled, it's a little bit sort of talking their own book, really. And I think everything's to play for still. That's the Leave and Remain press competing with each other again.
Okay, so what actually happened then on Saturday then, Jerry? Let's just remind ourselves a little bit about
sure.
that. And obviously we're talking about a potential deal that Johnson thought we'd got across the line. Well, we had got across the line with the European Union, and they were supposed to be voting about it, weren't they?
Okay, this is the interesting bit, although for some people it's boring at the same time, because we prefer to talk about the actual markets and what's happening to sterling, the equity markets, not just in the UK, but in Europe and the wider global markets. But it's important to understand that the world is looking at Brexit. The EU is very interested in Brexit. So we've got to explain what's going on here. For those that were consumed by the rugby and don't know what happened on Saturday, the UK Parliament actually was meeting for the first time since the Falklands War. And I think it was 1982, something like that. So it's quite unusual for it to meet on a Saturday. And they wanted, ostensibly, to vote on Boris Johnson's withdrawal agreement that he'd agreed with the EU and our friend Mr. Barnier and co. Anyway, before explaining why nothing happened, let's just remind ourselves exactly what MPs were voting on or wanted to vote on. The Johnson deal. What is the Johnson deal? It's that deal that's just been negotiated, and it deals with this ghastly thing that people are now using the term backstop to describe all sorts of things, but it's to do with the backstop, and I'll explain what that is. Theresa May, previous Prime Minister, she had her deal, the Theresa May deal, which basically said that if the UK failed to agree a trade deal with the EU, the UK would remain in the customs union with the EU until a solution is found. That is, the whole of the UK would remain part of the customs union. Anyway, the problem with the May deal was that Brexiteers hated it, because it kept the UK in a state of limbo. What I mean by that is they would have to wait for a trade deal to be agreed. And remember, this withdrawal agreement, Adrian, is something that is the first part of the process. After the withdrawal agreement, they've got to agree a trade deal. And that's what it's all about, getting flexibility, being able to strike our own deals. And if we can't strike our own deals because we're still a member of the customs union, you've got to ask the question, why will we do it? Anyway, that's why they hated it. So effectively, waiting to have an agreement with the EU meant that the EU effectively had a veto, because if the EU didn't agree to it, there wouldn't be a deal. And that meant we couldn't agree any trade deals, and the whole thing was just thrown up in the air. So the pluses for the May deal, of course, is that Theresa May's deal prevented a hard border between Ireland and Northern Ireland by keeping Northern Ireland in some aspects of the single market, not the customs union. So the single market. And that's what the DUP didn't like. They said, we've been separated now from the rest of the UK. We've been labelled as part of the EU forever. So that went out. Brexiteers didn't like that. Everything changed. So what's the difference about the Boris Johnson agreement?
Yeah, let's go through that then. So there are quite a few differences, aren't there? I mean, a lot of it remains the same, but it's more to do with the sort of the change of where Northern Ireland sits in terms of customs and so on, isn't it?
Not a lot has changed. This is the ironical thing. Everything that's protecting workers' rights, EU nationals in the UK nationals in the EU, none of that changes. This is all about the backstop and how Northern Ireland can remain part of the United Kingdom whilst also enabling it not to have any borders with the rest of the EU, i.e. with the Republic of Ireland. That's it. So what has actually happened is that Northern Ireland now remains in the UK and will benefit from any of those trade deals that the UK manages to do. However, in order to achieve no border checks between Ireland and Northern Ireland on the island of Ireland, to use islands repeatedly, the agreement includes a provision where goods entering Northern Ireland from the UK would be subject to EU tariffs. Now, this is something that the DUP don't like, but effectively it means that the Northern Ireland is in the EU customs union as well. So it's actually in a unique position.
Absolutely.
It's part of the EU and it's part of the UK. The only deal is there's got to be a lot of checks and balances to make sure that the goods coming into Northern Ireland from the UK, that tariffs are applied for. And if the goods stay in the Northern Ireland, then those tariffs...
Get that back.
They get that back, yeah. I think it's it sounds like a good deal. The DUP don't like it. They went along with it initially, but they ruled against it in the end when they couldn't get a veto. And that's really assuming that Stormont gets together again. And the problem with the DUP is they don't have a majority in Stormont, so they can't veto it.
So what were the concerns then with the DUP? What is it exactly they don't like about it?
Well, okay, the problem is they don't control Stormont. They don't have enough seats to do that. And the EU said on a simple majority in Stormont, you can vote whether to keep this arrangement going every 4 years.
Yeah.
But the DUP wants a veto, and veto effectively means saying they want to be able to put it to their electorate to decide, and if they didn't like it, they would cast it out. They don't control Stormont, so that they've decided that it's not in their interests, and their fear is that this arrangement would sort of create a them and us, whereby Northern Ireland could come under more influence from Dublin.
Yeah.
Absolutely.
Yeah.
And remember, they're unionists. They want to be part of the United Kingdom.
Yeah.
So that's their problem. So they're implacably opposed to it, really.
Okay, so obviously it's quite tight in terms of the House of Commons, in terms of the vote, and a lot of people have been talking about how we need the DUP's, the Royal We needs the DUP vote in order to get the deal through. Is that the case? Do we need the DUP vote for a deal?
Actually, no is a simple answer to that. But for the time being, this vote is off. But not necessarily because of the numbers. I just think the whole thing was hijacked. What happens is these amendments were put to the vote on Saturday, and this basically meant that the agreement has to be scrutinised by Parliament. They have to see the legislation, and this meant when that vote went through, or the amendment went through, there was no point Boris Johnson pushing for a vote on the having a meaningful vote, because it wouldn't mean anything. It was a meaningless complete Horlicks of a deal. But anyway, Parliament needs to scrutinise the legislation. I've just heard that the legislation has been drafted and will be published this evening. So it's possible, if we don't get a vote today, which I think is unlikely, that they will scrutinise it and it will be voted on tomorrow.
So there'll be a lot of very pasty-faced MPs pulling an all-nighter.
Okay, I think you referred to Red Bull and pet pills and all sorts of stuff to keep those lots of coffees and God knows flying around. But yeah, they want to scrutinise it. The legislation will have been drafted. I think it will go ahead. Do I think they've got the numbers? I think it is possible. I've already heard
Rob's talking about it.
Yeah, that's right. He was on, I think it was on Andrew Marr's show, and he basically said that they've got the numbers, and the press seemed to have picked up on it, and even the FT confirmed that they believe the government have got the numbers. So now it's just the Rebel Alliance attempting to frustrate the whole process by putting in amendment after amendment after amendment. But yeah, I'm not an expert on that.
It's interesting because of Letwin's amendment on Saturday, that obviously there would be an assumption there that because that was voted in favour of Letwin, that there wouldn't be enough votes. But of course, Letwin himself just wants to see the legislation, but he does support the deal. So just because he wants that amendment doesn't mean he doesn't want the deal. And in fact, let's assume that you've got, that's the Remain and Leave vote, the deal and no deal vote. You only need 8 to switch in order to actually get that deal across. Letwin, of course, being one of them.
Yeah. And what you've got to remember, so when people ask me, but if the DUP are going to vote against it, who's going to vote for it? The Tory rebels, they still want to vote for the deal. But the fact of the matter is there are Labour constituencies that voted Leave.
Yeah.
And they might have been threatened by Landsman and whoever in the Labour Party to be deselected.
Yeah, but it's quite a bit about that on Twitter last week, wasn't there? And,
but if you think about it, Adrian, there's going to be a general election. The chances of Labour at this moment in time succeeding is highly unlikely. Jeremy Corbyn and Momentum may not be in the picture after the next election. So anyone threatened with deselection, is probably on quite a good wicket. The problem is if they don't vote for the deal, their constituents are going to think, I might as well vote Brexit Party. Why am I voting Labour? So they're in a bit of a cleft stick, but that's where they're getting the numbers from. And from two reliable sources, it appears that they got the numbers.
Yeah, there's quite a few of the independents as well that were kind of kicked out of the whip, or whatever the expression is, in recent weeks. They're still voting.
20 of them, that's right. The majority of them, you've got Dominic Grieve, who will never, but the majority of them are actually toeing the line.
Yeah. Incidentally, I've got someone saying no sound. Hopefully we've not just been talking to ourselves for the last 10-15 minutes. I'm sure we won't have been, but if someone can just type hello and you can hear me, that'd be great. Just type sound good. Or if you can't hear me, then we've got a real problem, haven't we? Let me know, please, guys. Get in that questions box as well. And also, if you've got any questions, yep, sounds good. Thank you for that. That's wonderful. God, I thought we'd all sent you to sleep then, if nothing else. Remember as well, you can ask questions during this live event as well. That's wonderful. Thank you.
But we have got the boring bit out of the way. I mean, you've got to understand what's causing the markets to do nothing and why we expect them to do something. But with the fundamentals in place, at least we can then talk more positive about what we expect to see in the markets.
Well, that's right, because there's still a few scenarios, whether it'll go ahead, whether it won't go ahead, and of course that's going to have a big impact on the markets, most notably the pound. So let's just get into that in a second. But before we do, has anyone got any questions at this point about what we've talked about so far, or anything you'd like to discuss with regards to the impact on the markets? If you can just let me know, pop a message into that questions box, that'd be great. Remember, we can feed off some of those questions as we go through, so fire them out there. Don't be embarrassed, no one can see. You're not going to read your name out if you're not too sure about what you're saying. Don't worry, just get into that questions box and let's make this as interactive as possible, please. Okay, so what now then, Jerry? What sort of effects have we seen so far? We can certainly see that in the last week to 10 days, pound has had quite a big rally. What's that about? Why is it doing that?
Okay, well, the pound reacted from 122. So we're looking at the sterling against the US dollar.
Yeah.
The pound's been under a lot of pressure, not just against the euro, but against the dollar, but also against the euro. So you're looking at multi-month lows where we were at, and we've recovered. We've recovered sharply. Why have we recovered? Boris Johnson met Varadkar, sort of 12 days, 13 days ago, the previous Thursday, in Liverpool, I think it was, and they agreed a pathway to the deal. The market immediately shot up. So anyone who got any positions on was effectively short sterling in anticipation of protecting a no-deal scenario, which had been talked about for the last few months. So this rally is significant, but this is now reflects the optimism there is around a deal. Now that deal may be less beneficial to the UK than Theresa May's deal, but it's more acceptable to Parliament and it's more acceptable to the country. Yeah. When people say, oh, well, it failed to go through on Saturday, what happens if there's no meaningful vote today? The fact is sterling, it reflects people's optimism or lack of optimism. I wouldn't exactly say that the market's pulled back much, although reading out the press, some commentators are saying it has pulled back, but we're trading close to 130. Yeah. That's got to tell you something, hasn't it?
Absolutely, yeah.
Even if I don't know or you don't know.
It seems like somebody knows a little bit of something, or at least they know enough to back it themselves, don't they? I mean, like Noel's just asked a question. So deal basically means a rise in the pound, or an extension basically means the reverse. I guess really what it is, the more likely there is to be a deal, the better it is arguably for the UK economy, and therefore it is the pound. The more likely any interest rate move is more likely to be up, to make the pound more attractive, the less negative it's likely to be for the economy. So a no deal is likely to be damaging to the economy, and therefore more likely to have interest rate cuts or rather than rises, and therefore you're more likely to see the pound fall. That's basically the way of it, Joe. That's pretty much it.
Absolutely, in a nutshell. In a nutshell, yeah. It's a question there about is a deal also good for the euro? What's interesting about that is that the EU obviously has a very close relationship with the UK. The UK is Germany's biggest export market. Germany needs to get a deal with the UK. The EU needs to get a deal with the UK, and the UK needs to get a deal with the EU. So in conclusion, it's probably good for the euro as well.
The irony is, of course, they can't be too good a deal because otherwise every other country will want to leave the European Union as well. So it's a bit tricky, isn't it?
They've been playing that hardball game because, of course, they don't want to encourage other members to leave the EU at a time when it needs more integration, not less. Yeah. But no, my impression is that the DAX has been rallying for the last weeks or so in anticipation of a deal now.
Yeah.
And so it's really pushed ahead ever since Boris Johnson met Varadkar. it represents, I think it's fully priced. I think sterling.
That was that day when they met then, wasn't it? I think it was the 10th of October, I think.
That's
significant
right.
rally there. Daryl, and actually quickly, let's just, Mike's question here. Why are we not predicting a trade now? We're not going to predict a trade now on the basis that actually, funnily enough, we're not actually trading the pound at the moment, and we're recommending our clients not to, simply because of the slippage and the likely ferocity of any move should a deal then be announced. I'm going to talk a bit more about that a little bit later on there, Mike. What we're not interested in really doing is gambling. And the problem with sort of getting into a trade where you might have a massive move up to say 140 or maybe down to 122 within sort of, couple of minutes, it's a very dangerous thing to be in. I'm going to talk about the impact of that a little bit later on, if that's okay. Daryl, do you expect the stock market crash in any of the scenarios? I mean, I guess if we talk about a potential deal and the rally that is likely to cause on the pound, what would that likely have on impact on the FTSE or maybe the FTSE 250, Joe?
It's interesting. The FTSE 100 is a very international index, so the components, it's not really UK PLC, is it? I think that's
correct. Yeah,
that's really the FTSE 250 that we refer to. But
if you go back to the reaction we saw in 2016, we had a bit of a drop for literally one day, didn't we, on the FTSE? But actually, probably more like an hour. And then the FTSE just went through the roof as the pound dropped significantly, and the reason for that is exporting companies.
It's not just that. The price of all our major stocks in euros, in dollars, suddenly was a lot cheaper.
Yeah.
And because of that, nothing had changed in investors' minds. They just thought, well, this is 10% cheaper. If the currency had fallen 10%, I'll buy that. Thank you very much. So the swoon was short-lived. I think it did last a day or so, but then in quick succession, it just rallied so sharply. Yeah. I think it caught a lot of people offside. But as far as the FTSE 250 is concerned, I think it's a bit of a win now, I'd say. I think the likelihood of any no deal, although the government are keen to suggest that the 31st goes ahead come what may, Gove's already said that they're going to implement this Operation Yellowhammer, which effectively prepares for an imminent no deal, for the simple reason they've done the preparations and they want to convince everyone that they're going to leave on the 31st of October.
Yeah.
But I think there has been arguments that it's a win-win for the stock market. Certainly, our markets are probably undervalued. We haven't been investing much in the last 3 years. All this indecision. As soon as all that indecision is removed, it creates clarity, and I think it could unleash a wave of investment that the country needs.
I think the other thing as well is, if we're talking about sort of recessions and talk about interest rates cuts making bonds even less attractive than they already are, there's a talk about equities being kind of the only game in town anyway. One of the reasons for strength, particularly if other central banks started doing more QE, in which case you're likely to see stocks rising over the next however many months. It's difficult to make these predictions, you understand, but the point really being there's a lot to say the stock market would rise. So what we saw here back in 2016, that was the day after the referendum results. The referendum came in at like 10 p.m. or something, didn't it?
Yeah.
That day.
Yeah.
Next day, took a massive bath, spiked down, 600-700 points, and then closed next day. Then we started to see us significantly rally. So within sort of 5 trading days, we were quite a bit higher than we were when the referendum result came out. And I think a lot of people were expecting it to be quite negative for stocks, but actually it wasn't. So you'd probably argue that if there is a deal or a no deal announced, what you're going to have probably the big international exporting stocks are going to be more affected than the UK centric stocks, probably.
Yeah, no, I'd say that's exactly what will happen.
Yeah.
But it's a general rule of thumb, but from our perspective, this 3 years worth of negotiations so far has come to naught, but it's prevented businesses making any investment decision. But it's clear now that when the decision is made, whether you're a leave supporter or remain supporting business, the fact is they've all prepared. They just need clarity. They want to get it done. And so do I. So do you. And Chris, you're talking about your pension and your investments. I think it's going to be positive for it. It's difficult to invest in government bonds yielding sort of 0.5%, but it is a lot easier to contemplate investing in equities. you know, they refer to it as the only game in town, or there is no alternative in America. And it's probably right. Bond yields are just not attractive to anyone. Question is, do you keep your money in cash or do you put it in equities? And I'm not anyone to advise on that, but I know what I do.
Yeah, well, we're going to talk about some of the sort of trading opportunities a little bit later on, I think. But in fact, probably fairly soon, in fact, Joe. So have we got any more questions? Let me just quickly go through. Let me just check. No, I think we're okay to move on a little bit, actually. No worries, Chris. That's great. Okay. So just so we know, it's looking like there's going to be another vote on Tuesday, tomorrow, on Johnson's deal. Are we ready to talk about the market impact on the markets?
Yeah, definitely. I think
yeah. Okay. What I wanted to do is just have a quick look at a couple of bits, really, because if I just bring up sterling dollar, I just want to go through a little bit of theory, really, and I know this might sound a little bit dull, really, just to do this, but I just want to go through it for a second because, you know, when you've got something like Brexit going on, there is a temptation to kind of get a bit, you know, you start rubbing your hands together, getting a bit greedy, thinking there's going to be some fantastic movement and thinking, well, there's going to be some great opportunity, and there is. To my mind, though, the opportunity is not in the next couple of days. The opportunity is over the next 3 to 5 months. If I look back to the impacts and the movement that we saw on the pound markets back in 2016, it was the subsequent months, not the knee-jerk reaction, because that's gambling. It was after that where the real opportunity comes through. But before we get into the next few months, let's just have a quick look at, you know, what the possible ways in which some people might trade this and the dangers that are likely to come with it, okay? So just go through with me for a second. So we've got the pound currently trading at about 130, okay? Now, there's a couple of ways in which some people are going to look at some sort of explosive move. The market has got a chance of having an explosive move up if a deal is agreed, or an explosive move down, arguably if a deal is not agreed and it's more like a no deal, hard Brexit, basically, okay? So what's that likely to mean? It's likely to jump from A to either B or C very, very quickly indeed, okay? Now, that's fine. The problem is it makes it very, very difficult to trade. And the reason for that is something called slippage. Does everyone understand what slippage is, everybody? If you don't, I'm going to explain it anyway. Slippage is basically a difference, the price difference between the order price that you were expecting to be filled at and the price that you do get filled at. What I mean by that is, let's say you're trying to buy the market at, let's call this a 132. You will only be able to buy at that price if somebody is available to sell it to you at that price. Now, ordinarily, there is somebody on that side of the market because of normal market behavior and normal liquidity that's in the market, normal volume that's in the market, a lot of technical terms coming through here, but in normal scenario, you pretty much get the price that you expect to get. If you want to buy at 132.00, you really get filled at 132.00 or near as damn it. However, are we likely to move gradually if a deal is announced? Let's say it goes to 134, just for ease of reference here, okay? Are we likely to move gradually from A to B, or is it likely to happen in one very quick move? It's likely to happen in one very quick move. So if you're trying to buy with an order set above the market, you want to break. So let's say that price is trading at 130. If it gets to 132, the deal's done, which means the market's likely to carry on further, maybe to point B. Then what you could do is put an order to buy at that point. The problem is, if it happens as quickly as one would expect, you will not be filled at 132. You'll be filled effectively when the first sellers come back into the market because you have to be matched with a seller. Let's say that's at 134. That means you won't buy at 132, you'll be filled on a best endeavors basis with the first available seller, probably more like 134, so you'll end up paying 200 pips more than you expected, okay? Which may not necessarily be what you want. Does that make sense, everybody? Because remember, you can only sell to somebody that wants to buy from you at that particular price. They're not going to sell to you at 132 when they can get 134 from it in the market, okay? The problem being is that you will be filled at 134. The market, who knows what it's going to do then. You're not buying it at 132. That's basically the point. Does that make sense, everybody? And it'll be similarly to the downside. Give me a yes or no if that makes sense in that questions box there. Yes, it makes sense. No, if it doesn't, let me know, please. Similarly to the downside, there'll be an argument. Let's say you think the market's going to drop heavily because of a no deal and a hard exit scenario. What one could do is set an order at, let's say, 128, okay, to sell the market if the price goes down to 128. This is called selling on stop or a break order. And the idea being that if the market falls, then you'll make lots and lots of lovely money as the market drops and drops aggressively. But let's say it does that in 2 minutes. You're not going to be filled at 128. You're going to be filled at, let's say, 126, 125, 124, 122, whatever it may be. You'll end up selling it all the way down here and not the price you originally wanted. That is fair, by the way, because that's where the marketplace is deeming the price at the time. It never went to 128 because it jumped straight through it. The point being, again, you're selling all the way down here, and who knows what the price may have done. You were hoping for all this lovely profit, but it was never real in the first place. And this is the problem with trading in such a scenario. Trading with an order, or what actually some people might do, believe it or not, is that some people might decide, let me clear those drawings off there. They might say that at 130, this is a pivotal moment. It's going to break one way or the other. So in account A, I'm going to buy the market. In account B, I'm going to sell the market and just see which way it goes. I'm going to, hopefully I've got a buy and a sell. And I'm going to put a stop loss in. I'm going to put a stop loss on my buy down here, and I'm going to put a stop loss on my sell up here. That means that I'm protected, right? No, because again, if you gap through that stop loss, you're not going to be filled at 132 for your stop loss. You're going to be filled up at 134. So all that protection that you had, again, you're only going to be protected on a best endeavors basis with the first available buyer or seller. The only way you can guarantee that you get out with the stop loss that you wanted on such an order is if you have a guaranteed stop, Scott. Absolutely. Do you know what the problem with a guaranteed stop loss is? The problem with them is they're at the broker's discretion. There is no real thing called a guaranteed stop, which is why they're only available with market maker brokers. They're not available with direct access brokers because the broker is the one that takes the risk on. Now, usually guaranteed stops, which will guarantee your execution at a certain price, are available. And you usually have to pay for that benefit, okay? Because they're quite cool. They're quite good orders, particularly in fast-moving markets. However, do you know what the brokers are doing with guaranteed stops now? They're cancelling the ability to offer a guaranteed stop, okay? So you can't even do them in the first place because of the uncertainty. And a number of brokers have already cancelled guaranteed stops on sterling markets, maybe on the FTSE as well. The point really being, Mike, going back to the question of, you know, how do we trade this? This is a very dangerous thing to do. You either have to trade your view, which is that Brexit will happen, or i.e. a deal will happen or a deal won't happen, in which case you go buy or sell sterling respectively, or to be honest, don't go looking for the lottery ticket if you're undecided. Don't think we're going to have a massive move either way. I just need to jump on it because it's going to be very, very dangerous indeed. Does this all make sense, everybody? I sound like a bit of a poo-pooing the whole idea of trading it. I'm going to get on to the more interesting stuff in a second, everybody. Does this all make sense? Give me yes or no, please, in the questions box again. Are we all good? Okay, so now that we've got off the idea of actually trying to gamble on it, because I'm not interested in gambling, what I'm more interested in is playing the probabilities here. Okay, and looking at where the real opportunity is likely to happen. The real opportunity for me is not in the next couple of days. Okay, the real opportunity is what's likely to happen over the next few weeks. And in fact, I'm just going to demonstrate something by looking at a bit of a chart. So we had the Brexit deal, the referendum, sorry, I should say, back in 2016. What I'm showing you on this table here is looking at the end of day trading strategies that we teach here at Trend Signal. And if you take a look at every trade that's been triggered and looking at the best price that it gets to before our hard exit, if you like. I won't get into the detail. The point being is this gives us kind of a measure of volatility, if you like, and how fast the markets are moving. 2016 was the biggest year in terms of that volatility. It's the biggest year that we've had in terms of movement in price, okay? I would expect us, that gives us on average around 16,000 pips of opportunity per month on average over 2016, which is higher, of course, than 13, 14 and 15. So it was a very volatile month. There was lots more moves in the market, much more aggressive, and of course that was the year that the referendum took place. What that created was a lot of stimulus into the market, a lot of repositioning, particularly in sterling markets where institutions are repositioning their portfolios because of the impact sterling is likely to have. That created movement and it created opportunity. That's great. A lot of that movement happened after June. And what we saw in the sterling markets was a significant increase in price movement and turning points and trends after June than before June. And that's where the opportunity is for me. What I want to do is just have a quick look at a couple of examples. Let's have a look at pound dollar that we're seeing at the moment. So this is a chart up to a few days ago, the pound against the US dollar, and you're seeing a number of turning points in the market. The way in which we trade is basically to trade, one of the strategies is trading these sniper discs, these discs that are on the chart basically. Now I don't have time to get into much detail at this point, but I don't need to. Safe to say the movement on these zigzags is, you know what, 200-300 pips, okay? So a normal turning point, a normal change in direction, typically on the pound dollar will result in around about 200 pips of movement, maybe to 300 on a relatively big move, okay? That's fine. That's what we have been experiencing over the last few months. But what about going forward? The only way you can really establish what it might happen going forward is by going back. And if we go back to after June 2016, don't want to trade June 2016 on the referendum, I want to trade in the months thereafter. You're seeing these moves here. Bigger moves, bigger ups, bigger downs. These sorts of moves are the best part of 500, okay? That's best part of 500 as well. Instead of being 200 or 300 pips, these are 500 pips. This one, trade B here, I don't know why I'm calling it B rather than A. This was best part of 1,000, let's call it 300 points. These are significantly bigger moves. Very easy to spot, of course, just relatively straightforward turning points. The point really being here, guys, is that actually the more dependable movement is likely to be coming up over the next few months once we get that big portfolio redistribution, do you see? So what's then going to happen is bigger moves down. So trade B led to a significant fall as long as you're able to identify it in the first place, and that's where some of these discs and our trend signal trading strategies come in. But we can apply this to other charts as well. If I look at other sterling markets, sterling yen as an example, some lovely trades over the last few days, okay? September, October, a couple of great turning points there, and some nice trading opportunities. Again, these leading to 300-400 point moves, slightly more volatile sterling yen to sterling dollar, so 300 or 400 pip moves, okay? That's great, but let's clear that off. Let's have a look at 2016, and you're seeing the same, much bigger sort of thing, okay? Same sort of thing that we saw really just a few moments ago with sterling dollar. This is around 800. Similarly, around 800, this rally here, you're looking at what, 1,500 pips there. The real, I guess, opportunity that you're likely to see from this is in the aftermath. You're going to get the smoother moves, the smoother to identify rotations that are going to come through on the market, and accordingly, there's going to be more profit potential on those moves as well. You're likely, if the patterns of 2016 repeat themselves, we're likely to see bigger moves, bigger opportunity, and more dependable opportunity than we might get over the next couple of days. Okay, and again, we can see similar things when I look at other charts as well, the likes of pound Aussie. Again, this was best part of what, 2,000 pip fall there back in the September, so a couple of months afterwards. The idea being, if you're looking for a strategy to get onto some of these trading opportunities, the best time really is to start learning that new strategy now so that you have the strategy to be able to take advantage of these moves going forward. Again, a rally there, best part of 1,000 pips, couple of thousand pips fall, 1,000-point rally, that's pound against the Australian dollar and even euro sterling as well. Again here, back in August, September there. Sterling dollar is not the most volatile market in the world, and yet it still had a 900-point rally up to those highs. So for me, this seems like the lower risk and actually the much more dependable option for traders. Joe, what do you think about all that?
Well, it's interesting. I always think a known event like this, the start of the Gulf War back in, what was it, 1992, any event that's known, it's very difficult to predict what's going to happen because a lot of it's discounted. Yeah. There's a lot of very clever people, a lot cleverer than me, who are predicting what's going to happen, who worked out the odds of a deal, a no deal, where the market might go to. But I always believe that the decision is a bit akin to a brick being thrown into a pond. It creates all sorts of sort of chaos and confusion, and the markets make their move. But it's the waves that hit the edge of the pond and then come back. Once you know where it's going, then it's a question of interpreting the price action. Yeah. Not trying to read the tea leaves as to who's going to do what and why and wherefore, but price action is king. Yeah. Predicting it, a mug's game, riding the wave when it settles down is the key thing.
I think that's the other thing with it as well, is that you only have a Brexit vote once a generation or whatever, I don't know, whatever it happens to be.
Please.
There are not many of these black swan events, dare I use that term. However, we probably want to be getting into the market more regularly than that, don't we? We don't want to place a trade every 5 or 10 years, do we? And then gamble on it and hope we get it right. Actually, what we'd like to be doing is placing trades on a weekly, monthly basis. And the only way you're going to be able to do that is by taking advantage of or using a strategy that works and can pick up regular trading opportunities. And that's really what we're talking about here, is that, sure, you can go off and take that trade. If you think that we're going to get a deal across the line, then of course, argument's sake would suggest that you would buy the pound. If you think we're not going to get a deal, if you think we're going to be a hard exit, then of course you then sell the pound. That's basically the way it's likely to go. And you're going to get some big ferocious moves. That's one trade though. And that's done until what, the next 5, 10 years, until 50 years, until something else comes along. Actually, I think we'd all like to see more opportunities than that and know how to take advantage of the movement in the markets more regularly, wouldn't we? Guys, let me know in the questions box, what do you think? Are we looking for a one-off trading event? Or are we looking for more regular trading opportunities? You let me know, perhaps in the questions box there as well. Before we do move on a little bit, actually, I think for me, I know something we can talk very briefly about, Joe, is perhaps talk about a general election.
Oh, God. Yeah.
I mean, we'll keep it brief because we're probably overrunning a little bit.
No, well, it's interesting because I'm asked what I think of the FTSE, what I think of the T50, what I think of sterling. Sterling's a great barometer of an economy, the prospect. Interesting, I've just seen a report from the Bundesbank that Germany is probably in a technical recession now, so they think they've now got another quarter of negative growth. So, we might think we've got it tough where we are, and God knows we want to deliver Brexit, but it's tough everywhere. Remember, Brexit is quite a UK and an EU-wide thing. It's not the rest of the world. Sure, it comes up in dispatches, but they're a lot more worried about US-China trade war. Absolutely. Yeah. But actually, a general election, the reason why this is going to have to happen, you've got a government attempting to legislate, to run the legislative program with a minority. It just can't carry on. They're never going to. So what they have to do is get Brexit done, and I'm sure someone is going to call on their confidence vote. They're going to have a debate about the Fixed Term Parliament Act, and there will be a general election called. The problem with it is it'll create more uncertainty. Yeah. So whilst you and I might talk about sterling going to 132 against the dollar and further out maybe 140, which is a possibility, if they call an election, all that will do is just throw the brakes on any move like that, because then we're going to react to every poll. God forbid that we get a destabilizing extreme left-wing government in. I think a lot of people feel that. I'm not trying to nail my colours to any mast here, but I try to be a little bit apolitical in this, but it does cause a few problems, quite a lot of problems.
I don't think it'll have the impact like it has with Brexit. I think once Brexit's done, I think sterling can then start to be repositioned and so on.
Yeah.
I think the market will have enough big movement without having to worry about a general election.
Oh God, yeah. No. I think that, but it'll create more. How can I put it? More moves, more opportunities.
Yeah.
Brexit is a generation-defining event. No, I mean, you're asking me about the probability of an election. I think that the election probability is quite high. It will create a little bit of added uncertainty. Of course it is. We don't know what's going to happen. But that doesn't mean that you're not going to get...
it probably needs to happen. I think we're at stalemate otherwise.
Yeah, no, it definitely does. Remember, it's a 4-week deal. You know, the MPs are no longer MPs, and they've got to start campaigning, and then you have a vote 4 weeks later. So I think it will provide a lot of opportunity. And the polls, if the polls are right, then we know what will happen. And the markets clearly think it's unlikely that there's going to be an extreme left-wing government in power. And of course, the polls are never wrong.
Aren't they? Isn't that right? Okay, well, guys, I think that's pretty much it from us. Joe, anything to add otherwise?
No, that's pretty much it. It is quite fluid. Just as an update, I've just been checking the wires. The Speaker, John Bercow, is going to announce at 3:30 whether he's going to allow another meaningful vote today. It is very fluid, and you may have picked up on stuff whilst we've been talking, everyone, so you may know more than I do about what's going on. But I think come tomorrow, we will have some sort of meaningful vote. Because there will be a second reading of the bill that will enable a vote to take place tomorrow. So not Super Saturday, it was Super Saturday for the rugger, Super Tuesday, let's call it that. So watch this space.
Doesn't quite roll off the tongue, does it?
No.
Guys, if you've got any more questions, fire them through into the questions box because we'll be closing down in the next couple of minutes. But just so you know, we have recently... Jerry and myself started our new podcast, even though we do use a screen, so it's not technically a podcast. And we record these every Monday now, so you're welcome to tune into those on a regular basis. We certainly like to think that we've got some interesting stuff to talk about. It's all a bit Brexit focused, but going forward, we'll be talking about all sorts of weird and wonderful stuff affecting the markets there, guys. You can access that by going to the Trend Signal website and looking at the blog page there. You can go to the Facebook page and search for Trend Signal Systems, or you can go to Twitter and you can look for Trend Signal as our Twitter handle on there. Otherwise, if you would like to learn more about some of the trading opportunities that might be coming up over the next few months, and you'd like to learn a strategy that could help you identify those, just like we were showing those back from 2016 and then in the coming up into the vote of the last few weeks, then we would like to invite you to one of our live trading events where we can teach you our sniper trading strategy. Now, in order to attend that event, you have to book yourself a place. You can do that by just going to the website and then finding the registration link on the right-hand side. But what I'll also do is direct you to this page as well, where you can book in for a live event. We've got 3 of them this week where you can book in. We'll teach you the sniper strategy. And if you like it, maybe that's something you can use to help identify some of those crucial sterling, dollar, and other market turning points in the months and the years to come. I'm just going to post a message into the questions box now, which will give you the link to click on. So give me a few moments to do that. Just bear with me. Okie dokie. Hang on there. Okay, so there is a link in that questions box there. You can click on that. Let me just do it again. You can click on that link and then you can register a free place at one of our up and coming events. Otherwise, guys, hopefully that was a very useful session. It's certainly the first live event like this that we've done as our podcast. Hopefully it's been useful. Your feedback will be very well received in the questions box, or maybe send an email about it to info@trend-signal.com. But otherwise, myself, Adrian, thanks very much for attending today.
And from Joe, thank you, all the best, and good luck with Brexit.
Right, guys, all the best, and bye-bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.